Okay, so this is going to be a breakdown of Euro USD, a quick setup. This is coming from a long-term bias from the weekly chart. So according to the weekly, I have my structure, meaning that structure has been moving downside. This is my A, this is my B, and all of this is my internal liquidity. So only thing I'm looking for is for price to grab one of the liquidity areas, give us confirmation that it is going to sell or drop. Okay. And if I drop to the 4 hourly rather than the daily, because the daily is going to translate the same information as the weekly. If I go to the 4 hourly, I had a small area marked out here. So this is basically the same principles that we look for in every single pair, time frame, and everything that we basically follow in terms of trading. So we want your structure, we want your impulse, and we want your point A, your point B, and your that is going to basically give you your range. And then from that, you're going to pinpoint your liquidity areas. Remember that your liquidity areas need to fall in line with the PVD, which is premium versus discount, and also any supply or demand areas. Okay, but most importantly, you need to take out some liquidity first in order to confirm a setup. So right here, you can see that on EURUSD on the hourly charts, we have our point A here at the bottom. We got our point B right there. And all of this was internal liquidity. So it's not really clear on the 1 hour chart, but if you go to the 15-minute chart, it is much more clear. And price did exactly what we would expect it to do. Okay, so it was higher, went down, took out this first liquidity, took out the second liquidity, and then the third liquidity. Bear in mind that I only marked this area out because this area and this area would be regarded as one area. Okay, so it took out price and then ran for a couple of pips. Let me just quickly mark that out and see. So this would have been our preferred entry point. Okay, so if we follow that, we go back to the hourly chart. Okay, let's just do the 4 hourly. So if we do the 4 hourly, I'm just going to copy this and put it here on the side. If we do the 4 hourly, that is going to be our A point. We don't really have a B point. The reason why we don't have a B point is because there hasn't been any reversal at the moment, confirming that price is reversing, okay? But in the meantime, what you can actually do is mark out your liquidity areas just to pinpoint them just in case price reverses, given the fact that market is going to open tomorrow and it's a Monday. So I would mark this area out as my liquidity area. I would also mark this area out as my liquidity area. So these are the possible two areas where price would reverse towards and then go higher. And bear in mind, again, we still need to take into consideration that we have the premium versus discount. So let's say, for example, this is a high point, then we would have to basically put our Fibonacci right there, meaning that we have our 50% right here, meaning that if price was to reverse and we look for an entry, this would be the highest probability area that I would look to buy. So I'm just going to close this out here and then wait for price to move tomorrow, which is Monday, and then I'm going to come back with a quick update.